Let's get ready to rumble!
Hey everyone, and welcome back to Novice Investing Guide. Today we are having another showdown of ETFs. This week we're looking into the world of call ETFs for income. If you're looking for steady income and lower volatility, these funds might be perfect for you. We'll be comparing 4 popular ETFs: QYLD, JEPQ, QQQI, and DIVO. By the end of the video, you'll know which one reigns supreme and aligns with your investing goals. Let's jump in. First, for those unfamiliar, call ETFs use a strategy where they own stocks and sell call options on them. This generates income from the premiums, but it does cap the upside potential of the stock. These 4 funds are ideal for income-seeking investors, but less so for those seeking aggressive growth. Stick around to the end of the video for the declared winner based on the income. If you are interested in applying the call strategy in your own personal account, check out our video on options. Now let's get to know our contenders. First, we have the Global NASDAQ 100 Covered Call ETF, QYLD, in the red corner. This ETF's objective is to provide monthly income by writing covered calls on the NASDAQ 100 index. The yield on this ETF is pretty high, typically around 12%. In 2024, this ETF paid out $2.28 per share at an average price per share of $17.83, giving a 12.8% dividend yield for the year. The holdings are heavy in tech giants like Apple, Microsoft, and Amazon. The expense ratio is 0.6%. The pros for this ETF are high income and tech focused. The cons are limited upside potential and heavy exposure to the tech volatility. Next up in the blue corner is JEPQ, the JP Morgan NASDAQ Equity Premium Income ETF. This ETF objective is to combine actively managed large cap tech exposure with an income strategy. The yield for this ETF is typically between 10 and 12%. In 2024, this ETF has paid out $5.45 of dividend at an average price of $53.94, giving a 10.1% dividend payout. JEPQ holds NASDAQ heavy stocks. The expense ratio is 0.35%. The pros with this ETF are active management, provides some downside protection and growth opportunities. The cons that it's a slightly lower yield than QYLD. Next up in the green corner, the Next Evolution Option Strategies NASDAQ 100 QQQI. The objective of this ETF is to distribute high monthly income from the NASDAQ 100 on a call option strategy. In 2024, this ETF paid out $6.72 per share at an average price of $51.08, giving a 13.2% dividend for 2024. The holdings for this ETF are NASDAQ 100 components. The expense ratio for QQQI is 0.68%, and the pro on this one is the big income. The con for this ETF is less historical data, as the inception date was January of 2024. And finally, in the yellow corner, we have the Amplify CWP Enhanced Dividend Income ETF, DIVO. The objective of this ETF is invest in high-quality dividend-paying stocks with selective covered call writing. Typically, this ETF yields 5% annually. In 2024, this ETF paid out $1.90 per share at an average share price of $39.48. Giving a yield of 4.81% of dividend income in 2024. This ETF has holdings across sectors, including Procter & Gamble, Visa, and McDonald's. The expense ratio is 0.55%. A pro of this ETF is that it combines dividend growth with covered call income, and it's diversified beyond tech. Cons are that it is a lower income ETF compared to the others, and it's a high reliance on dividend growth. So which ETF might be right for you? Let's break it down. QYLD is great for those seeking maximum income and are okay with limited growth potential. JEPQ is great for those wanting high income with a more balanced approach to growth and risk. Maybe it's QQQI, ideal for investors who are looking for big income. DIVO is perfect for long-term investors who value dividend growth and steady income with less tech concentration. Take a look at these return numbers for 2024. There is a short time frame available for this data since QQQI was only started in January of 2024. Now let's see what our contenders can do in the ring. QYLD hits first with its expected payouts in the 10 to 12% range. JEPQ sweeps the leg with its high payouts and lowest expense ratio. QQQI is punching hard with its total return for 2024 and highest payouts. DIVO with a low kick, representing its diversification from tech. The judges are tallying up the scorecards and this one's really close. In an unprecedented move, there's a tie between QYLD and QQQI. QQQI has a higher total return, but has only been around a year or so, which took some points off. I currently own JEPQ and QQQI of these ETFs. I'll be looking to open a position on QYLD after seeing this match. Which ETF meets your goals and objectives? Comment down below. Call ETFs can be an excellent tool for generating income, but it's crucial to match them with your financial goals and risk tolerance. If you found this breakdown helpful in selecting your next ETF, don't forget to like, subscribe, and hit that notification bell for more beginner-friendly investing tips. Until next time, happy investing.